Most people have no idea why the wealthiest individuals on the planet are quietly shifting their money away from the stock market and into something ancient, raw, and deceptively simple. But I need you to hear this clearly. When the elite begin buying dirt, not stocks, not bonds, not tech, but literal land, it is never random. It is never emotional. It is never a trend. It is a warning. And right now, that warning has become deafening. This is one of the clearest signals that the global financial cycle has entered a dangerous phase, a phase where paper wealth becomes fragile, markets become unstable, and real assets become the final refuge of those who understand the storm approaching. You may not feel the shift yet, but the elite do, and they are preparing faster than most people can comprehend. Stay with me, because once you understand why the richest are buying land at a pace not seen in generations, you will understand exactly where this economy is heading and what you need to do before the window closes. My name is Marcus Blackwell. I am not a financial advisor, but I uncover the truth behind global finance, the hidden instability, the currency decay, and the slow structural cracks most people never see coming. My mission is simple: to help you understand what is unfolding. Prepare before the headlines hit, and remain financially unbreakable while others are caught off guard. I study long-term patterns, not distractions. I watch the movements of the elite, not the promises of politicians. And when I see billionaires, hedge funds, sovereign wealth entities, and multi-generational families all rushing to acquire land across continents, I do not see a fad. I see a signal that the old financial order is shifting, that the foundations of the market are cracking, and that those who understand history know exactly what comes next. Because this behavior has happened before, and every time it does, it tells a story of what tomorrow will bring. To understand why the rich are buying dirt instead of stocks, you must understand how wealth survives when systems begin to shift. Throughout history, during moments of inflation, currency debasement, social fragmentation, political instability, or economic transition, one asset has always outperformed financial paper: land. Tangible, immovable, essential land. It cannot be printed. It cannot be conjured into existence by a central bank. It does not vanish in a bank failure. It does not evaporate during a market crash. Land is the foundation of every civilization, every empire, every economy. And in every moment of instability, it becomes the safe haven for those who can afford to think decades ahead. When Rome faced its currency collapse, the elite bought land as the ultimate store of value. When Weimar Germany's paper currency disintegrated, those with land survived while those with cash were destroyed. When the Soviet Union crumbled, those with access to land transitioned through the chaos with more resilience than the rest. And today, the same pattern is returning. But let me show you the deeper truth. The rich are not just buying land randomly. They are buying specific types of land: agricultural land, water rights, timberland, mineral-rich land, strategic rural land outside major cities, land that produces resources, not liabilities. This is not sentimental. It is mathematical. When inflation becomes structural, not temporary, food, water, energy, and raw materials become more valuable than stock valuations or speculative financial instruments. And the wealthy know that the current economic environment has entered a phase where those fundamentals begin to dominate again. If we want to understand this fully, we must follow the timeline. For decades, financial markets were artificially inflated by low interest rates, cheap borrowing, globalized labor, and massive liquidity injections. Stocks soared not because productivity soared, but because money was abundant, debt was cheap, and speculation was rewarded. But this era has ended. Interest rates have risen. Inflation has eroded purchasing power. Debt service has exploded. Market volatility has increased. And central banks can no longer stimulate without risking further damage to the currency. The result is a system entering late-stage behavior, the kind of behavior that pushes the elite toward real assets instead of financial illusions. I will show you the blueprint that every empire follows. Stage 1 is the productive rise, when real output drives wealth. Stage 2 is the prosperity peak, when stability and global trust dominate. Stage 3 is the overextension, when debt and consumption grow faster than production. Stage 4 is the institutional decay, when polarization, inflation, and stagnation begin to undermine the system. And Stage 5 is the reckoning, when the currency weakens structurally, the middle class contracts, and the wealthy flee paper assets for hard stores of value. America is now in Stage 5, and the migration of wealth from stocks to land is one of the clearest signs of that transition. To understand this fully on why this is happening now, you must look at the current economic pressures that most people fail to connect. Inflation did not simply raise prices temporarily, it reset them permanently. The cost of housing, food, utilities, vehicles, and essential services have jumped to levels that cannot be reversed without a deflationary crisis. The purchasing power of the dollar has declined, and even if inflation cools, the damage is already done. The wealthy know this. They understand that once a currency weakens, it rarely regains its old strength. And they understand that the safest hedge against currency decline is the asset that produced wealth long before the modern financial system existed: land. But this is where the story becomes even more urgent. The stock market no longer reflects economic reality. Beneath the surface of rising indexes lies a fragile structure dependent on liquidity, sentiment, and a handful of overvalued tech companies. Meanwhile, household debt has reached historic levels, commercial real estate is collapsing, banks are tightening credit, and default rates are climbing. The elite see this. They know the difference between a market rising on fundamentals and a market rising on borrowed time. They know that when asset bubbles expand faster than incomes, the end game always arrives. And when it arrives, paper assets suffer first. Now let us take a look at what the wealthy are preparing for. The first threat is inflation's second wave. Historically, inflation rarely comes only once. After a brief cool down, it often resurges with greater intensity, especially in late-stage cycles when governments are forced to print to cover rising debt service. The second threat is a liquidity crisis. Rising interest rates have already strained banks, corporations, and households. When liquidity dries up, markets fall, credit contracts, and the economy enters a tightening spiral. The third threat is currency erosion. As global trust shifts and nations diversify away from the dollar, the United States loses its unique privilege, meaning the cost of borrowing rises and the currency weakens structurally. And the fourth threat is social fragmentation. When living costs rise faster than wages and economic opportunity declines, social tension increases. This affects cities, markets, policies, and long-term stability. The wealthy understand these risks because they have seen them before. History is their blueprint, and history tells them one thing above all. When a society enters a late-stage economic cycle, the people who hold real assets survive the transition, while the people who hold paper promises suffer. That is why billionaires are buying farmland at a pace not seen since the early 20th century. That is why investment firms are acquiring water rights. That is why global wealth funds are securing agricultural land on multiple continents. That is why hedge funds are buying timberland. That is why private families are purchasing ranches, rural property, and resource-rich acreage. They are preparing for a world where essentials matter more than speculation, where production matters more than narratives, and where survival depends on tangible value. But here is where the story becomes even more interesting. The rich are not just buying dirt. They are buying dirt that produces cash flow. Farmland yields crops. Timberland yields harvests. Mineral land yields resources. Water rights yield control. Rural land yields strategic advantage. These are not static holdings. They are income-producing assets that become more valuable during inflation, during instability, and during currency decline. They outperform stocks in late-stage cycles because stocks depend on economic stability, while land produces regardless of the system's condition. The average person does not see this shift yet. They are focused on the stock market, on headlines, on political drama, on short-term noise. But the wealthy are focused on the long arc of history. and their behavior reveals what the next decade will look like. A decade defined by scarcity, instability, transition, and the revaluation of real assets. You must understand this clearly. The rich are not buying land because they want to live on it. They are buying it because they know what is coming. They know that the financial system is entering turbulence. They know that the monetary system is shifting. They know that the global order is evolving. They know that the currency is weakening. And they know that when the storm arrives, land will not just protect wealth, it will multiply it. This is why you must pay attention now. Because what the wealthy are doing today, the rest of the world will try to imitate tomorrow. But by then it will be too late. Now that you understand why the wealthy are rushing toward land, we need to go even deeper into the mechanics of this shift, because it is not the land itself that matters most. It is what the land represents in the late stages of an economic cycle. You see, land is not merely an asset. It is a form of sovereignty. It is independence from the fragility of the financial system. When the rich buy land, they are not simply acquiring acreage. They are acquiring autonomy. They are acquiring insulation. They are acquiring a shield against the failing promises of modern finance. And most importantly, they are acquiring something that the market cannot reprice to zero in a single violent moment. When a stock crashes, it can lose decades of value in a few hours. When a currency weakens, it can erase purchasing power in a few months. But land remains. Land endures. Land produces. And production is the backbone of survival during a transition. Let me show you what I mean. In the early 20th century, during the agricultural depressions that preceded the Great Depression, wealthy families acquired farmland across the Midwest because they understood that regardless of market conditions, people would still need to eat. During the 1970s, when inflation surged and markets convulsed, the elite turned to land again because they knew that a currency losing value could not erode the intrinsic worth of soil, water, and harvest. After the 2008 financial crisis, institutional investors poured billions into agricultural and timberland because they recognized that global instability would increase the value of essentials. And today, we are witnessing the next wave of this pattern. Billionaires are securing farmland in the United States heartland. Foreign wealth funds are acquiring agricultural acreage in Africa, South America, and Eastern Europe. Private equity firms are acquiring ranch land in the Mountain West. Tech billionaires are quietly purchasing thousands of acres in rural states. Sovereign wealth entities are buying water rights in regions facing scarcity. And multinational corporations are securing mining rights and timber resources with long-term strategic intent. This is not coincidence. This is not trend. This is preparation. And the reason they are preparing now, at this specific moment in history, is because the financial system has entered the phase where instability is no longer a risk. It is a trajectory. Rising interest rates have exposed the vulnerability of corporations, households, and governments that depend on cheap borrowing. Inflation has eroded consumer strength. Global trade fractures have increased the cost of essentials. Geopolitical tensions have destabilized supply chains, and the dollar's long-term dominance has begun to face competition from emerging alliances and alternative trade mechanisms. These are the structural forces that push the wealthy toward land. Not because they fear the end of the system, but because they understand the transition of the system. Remember the stage map. Every empire moves through the same cycle. Stage 1 is the rise. Stage 2 is the peak. Stage 3 is the overextension. Stage 4 is the institutional decay. Stage 5 is the reckoning. And Stage 6 is the reset, where the system transforms into something new. When the wealthy buy land, they are signaling that the system has passed Stage 4 and is firmly deep into Stage 5. They are not betting on collapse. They are positioning for the reset. So let us examine the psychological dimension of this behavior, because it reveals a truth most people overlook. Wealthy individuals and institutions do not fear volatility. They fear illiquidity. They fear being trapped in assets that cannot be converted into real value during a crisis. Stocks are liquid until they are not. Bonds are safe until they are not. Banks are stable until they are not. But land remains valuable even in the harshest conditions. You can grow food on it. You can lease it. You can harvest it. You can mine it. You can rent it. You can subdivide it. You can extract from it. You can shelter on it. You can store on it. You can build on it. You can generate energy from it. No market crash can erase its usefulness. And that is the key. Utility is the ultimate form of security in uncertain times. The rich understand that the next decade will not be defined by speculation, but by utility. It will not be defined by digital abstractions, but by fizz. ICAL resources. It will not be defined by consumer optimism, but by structural realities. And structural reality is always tied to land. Now consider what inflation does to financial markets. When the cost of living rises faster than wages, consumer demand weakens. When consumer demand weakens, corporate profits decline. When profits decline, stock valuations become unstable. Meanwhile, the government must borrow more to fund obligations, which increases interest payments, which pressures the currency, which forces central banks to choose between inflation or recession. None of these dynamics benefit paper assets, but all of them benefit land. Inflation raises the value of agricultural output. It raises the value of timber. It raises the value of natural resources. It raises the value of water-controlled land. It raises the value of renewable energy property. It raises the value of strategic rural acreage. And it raises the value of income-producing land that can adjust rents or yields with market conditions. The wealthy understand this. They see inflation not as a headline, but as a structural transformation. And because inflation benefits land far more than financial instruments, they are reallocating their wealth accordingly. Now let us take a look at something only a few people would consider. During financial instability, land becomes a form of collateral that banks trust more than stocks, more than bonds, and more than business equity. It opens credit lines, it creates leverage, it enables opportunity. When the wealthy acquire land, they are not merely preserving their wealth. They are increasing their financial power. They are giving themselves the ability to borrow against hard assets while the rest of the world struggles with shrinking liquidity and tightening credit markets. This is why land buys more than safety. It buys advantage. And this leads us to the third dimension, the geopolitical context. Nations around the world are entering a period of resource competition. Water scarcity is rising. Agricultural productivity is being tested by climate and supply chain disruptions. Energy transitions are destabilizing domestic and international markets. Food security has become a strategic priority for governments. In such an environment, land becomes a geopolitical asset. It becomes leverage. It becomes bargaining power. It becomes a tool of sovereignty. Wealthy individuals know this. They are positioning ahead of governments, ahead of institutions, ahead of the public. They are preparing for a world where essentials determine influence, where production determines power, and where self-sufficiency becomes a form of security. You must understand how profound this shift is. For decades, wealth was built through services, technology, financial engineering, and global trade. Today, wealth is shifting back to the fundamentals: food, water, energy, minerals, timber, physical shelter, and land is the foundation of all of these. But here is the part that should concern you. The window to follow this strategy is closing. Land is finite. Once institutional investors and billionaires acquire it, it becomes inaccessible to ordinary people. Prices rise, availability falls, control consolidates, and those without land become dependent on those who own it. This is why you must pay attention now, not later. Because the behaviors of the wealthy are not predictions. They are signals. They reveal what the future will require, and the future will require tangible value. So what does this mean for you? It means you cannot rely solely on paper assets. It means you cannot assume that the stability of the past will protect you in the future. It means you must think like the wealthy even if you do not have their resources. It means you must diversify into real value. Land may be out of reach for some, but exposure to tangible assets is not. You can pursue fractional ownership. You can invest in alternative stores of value. You can acquire even small, strategically chosen acres in regions still affordable. You can focus on cash-flowing hard assets. The point is not scale. The point is alignment. The rich are not preparing for the end. They are preparing for the transition, and you must do the same. Here is where the message becomes urgent. The financial system is shifting. The currency is weakening. The stock market is vulnerable. The debt load is unsustainable. The global order is fragmenting. The social fabric is straining. These are not random events. They are signals of Stage 5. And Stage 5 is always the moment when wealth rushes into hard assets before the rest of the world realizes what is happening. You are not late, but you are not early either. You are standing in the narrow band of time where individuals can still position themselves before the reset accelerates. That is why this matters. Because history does not reward panic or denial. It rewards preparation. So here is the truth you must carry with you. The rich are buying dirt because they know what is coming. They know that the next decade will reshape the global financial landscape. They know that real assets will outperform paper promises. They know that land will hold value when markets break. They know that essentials will determine power. And they know that when the transition arrives, those who own the ground will control the future. When you understand the past, the future stops being frightening. It becomes predictable. And remember, the wise prepare quietly while the unprepared panic for all to see. If you found value in this, subscribe. Stay with me, stay informed, and stay ahead of the headlines.